Hey everybody, good morning to you. It is Wednesday, time for Trader Talks. My name is Brent Moores, and I just want to welcome you today. I'm sitting in for Kevin Horner today, and I am joined by Rachel Deshelle. Good morning, Rachel.
Good morning. How are you?
I'm doing good, Rachel. I'm glad you're joining me today, and just want to remind everybody that you can follow Rachel and myself on X at Brent Moore CS at Rachel-CS for additional content throughout the week. And Rachel, before we get to the markets, let me just mention there's a few disclosures we do need to go through. The information today is for general informational purposes only, and it is not a recommendation, individual recommendation, or personalized investment advice. Options carry a high level of risk. We may not deal with options today, but let me just mention that they do carry a high level of risk and are not suitable for all investors. And the paper money software application is provided for educational purposes only. Schwab does not recommend the use of technical analysis as the sole means of investment research. Past performance is no guarantee of future results. And investing involves risks, including loss of principal. And let's see. I think let me just mention this. Virtual, you should carefully consider whether trading in virtual currency derivatives, whether that's appropriate for you in light of your experience, objectives, financial resources, and other relevant circumstances. Let's head on over to the markets here. Sorry, I had a little tech issue, but I'm recovered now on that. And Rachel, we have the S&P 500. Big sell-off yesterday. This morning, just opening up, not much change to get things started. What are your thoughts on this S&P 500 chart? By the way, everybody, this is a 20 and a 50-day moving average on my chart here right now.
Yeah, Brent, I think it's because it's been a little choppy, and I think the number one reason just comes down to a lot of the index weighting that we've seen. Obviously, there's been a lot of chop, a lot of consolidation in technology and some of the major names that drive a large percentage of this index. So I think that's why we're seeing a little bit more range-bound action here in the S&P 500. I mean, just over the last couple months, we have been going back and forth between crossing that 20-day and that 50-day moving average. So there's really still not been a huge trend here, but I think the index really needs the tech sector specifically to really kick in here to be able to push to those highs again, all-time highs around 7,000 or so. What are your thoughts?
Yeah, so I agree that 7,000 is kind of a key level. Both just those round numbers can be kind of a psychological level, can be an impediment to going forward. We did go right up to it recently, and then we tested it yesterday kind of early, but from there we had a big sell-off. And in terms of the moving averages, we have the 20-day, which we've been kind of going up and down through. The 50-day, for the most part, has held. We've maybe dipped down below intraday or 1 day. One exception, we had a little bit longer, but yesterday we touched it. But by the end of the day, we actually ended up okay on that. So, if you depends on your time frame. If you look at that 6-month chart, general uptrend, but it has been kind of leveling out a little bit. To your point, Rachel, if you look at, say, let's see, let me go to the Visualize tab. When you talk about the sector representation here on this and how important information technology is, this is the S&P 500 here, folks. And so if this represents the whole of the S&P 500, and it's kind of marked off in little sections, this much, which is, I don't know exactly, that's roughly a third of the S&P 500 is IT. And if you factor in communications as well, that's another big chunk there. So when you say, hey, it's hard, it's difficult for the S&P 500 to make higher highs, it's going to be very difficult to make higher highs unless you get some decent representation from the IT sector and the communications sector there as well. And if we turn to the NASDAQ, it's going to be even more so. Here's the NASDAQ, by the way. And if we look at that, we'll look at this chart in just one sec, but it's an even bigger issue with that NASDAQ. If we, sorry, let me just click that on and change this here to the NASDAQ. If you look at the percentage of the whole pie, so to speak, that is the NASDAQ, close to half of the NASDAQ is IT. You throw in communications, practically the entirety of the NASDAQ is IT or communications. So if we're going to want to see higher highs on the NASDAQ, it's really going to require some representation, some movement in the IT and communications. Thoughts on the NASDAQ chart here?
Yeah, I think it looks pretty much identical to the sector chart for technology. Just a lot of range bound action here, no real true trend. And to your point, it's going to make it's going to be especially more difficult for the NASDAQ 100 to move to all-time highs just when technology really takes up roughly half of the index weighting. Now with the S&P 500, you have a little bit more of a chance to move to all-time highs, I guess. It may be slower, it may be more of a rotation type story, but with the NASDAQ being 50% tech, it's going to be a little bit more difficult until tech really starts to dig in here and possibly can find its way with another leg higher.
Yeah, and we kind of had some potential resistance here. Looked like maybe we were breaking through it, but we couldn't hold that. And then we had about 3 days where we skimmed right off the top of that, and we're back below now the 50-day moving average. So that's not a super strong sign for the NASDAQ. We're down a little bit today. In terms of support levels, these are kind of, I think this 25,000 seems like probably a fairly key level here. Because if we break below that, it's that 25,000 level. We had a low there back in kind of mid-January, but that would not be a good sign if we broke below that. All right, let's take a look at small caps here, Rachel. This is, here's the Russell 2000. So here's small caps. They've actually hung in there pretty well, especially given the interest rate situation. But a little bounce here. Rachel, what are your thoughts on the performance on the small caps here?
Yeah, so it looks like we just had that recent bounce around 2600, that level that you just marked. We had that bullish engulfing candlestick actually occur right at that level of, some would say, like crucial support there at 2600. And then we had that follow through the next day as well, where we made a higher high in that next day of trading. And then it looks like we're still kind of battling with that 20 period moving average. But like Brent, to your point, you mentioned just kind of like, it is a little surprising, the resilience in small caps, given the fact that the rates, like the 10-year yields, are looking like they are moving up to the upside near resistance, right around probably like 4.35 or so, or in this case, like 43.5. So that is interesting to me. That kind of sticks out because typically those two are inversely correlated, where if you have higher rates, it's typically going to hurt the small caps because they have more debt, less cash. But we're kind of seeing the opposite kind of occur, where we are having a little bit of correlation in this case. So I find that interesting.
Yeah, and I know Kevin and I have talked about this, and you know, the more this interest rate, and by the way, for those of you who aren't familiar with this is the 10-year yield multiplied by 10 essentially there. So you just move that decimal point over a spot if you want the actual 10-year yield here on this. But it has been a little surprising that I think, at least to me, that small caps have been as resilient as they have been, given the move up in interest rates. At some point, you'd probably expect it to wear on small caps. So far, we haven't seen that much. But keep in mind also, very often we'll talk about the effect of interest rates on small caps. Certainly, interest rates can affect other stocks as well. When you're trying to value companies, say you're valuing a tech company that is dependent upon growth and whatnot. Well, part of that is what discount rate you use, and this is higher interest rates are going to affect how much you value the future cash flows of all companies, not just small caps. So this certainly can be challenging for the market. I don't know exactly where interest rates are going, and keep in mind the short-term rate. When we talk about the Fed cutting the Fed funds rate, that's not the 10-year, although there is a general correlation between shorter term rates and longer term rates. It's not exact, and sometimes we'll see, and we've seen this over the last couple of years, where the Fed lowers interest rates on the Fed funds rate, and the 10-year actually goes up in rate a little bit here. So now, a lot of the movement that we've seen on some of these things like the NASDAQ has been from some of these big tech earnings that have come out lately. We're going to look at that in just a few minutes here. But let's look at some other parts of the market here right now as we go forward, because we've seen big moves on gold and silver. Here's gold, which has kind of had this meteoric rise for a long time. Big drop in gold the last few days, maybe a little bit of a recovery. Your thoughts on gold here, Rachel?
Yeah, what I think is interesting is if you kind of take the lows from October or so and use a Fibonacci retracement to connect those lows in October to the highs, all-time highs that we made there around 56.26. I find it interesting that price actually retraced, roughly that large 61.8 retracement of that entire move and seemingly found support at that 50-day moving average. So quite a correction that we've seen. And then it looks like we've been able to reclaim the 38.2% retracement as well. So I think those may be a few different levels that traders may be watching here in the near term as far as support and resistance.
Yeah, so each of these potentially can be support or resistance levels. So as we came up, that was a potential resistance, and so far today we're holding that on gold. Obviously, there's different reasons people invest in gold. A lot of times, historically, gold has just been like a way to diversify a portfolio, and people are going, well, you know what, the returns may not be good, but um, it's diversifying my portfolio. Well, lately that hasn't been the narrative. The returns on gold have been so good that a lot of people are using it more as a kind of a speculative investment here. But as we've seen, after such a big move up, you can see a big move down quick. It can move down quickly too when things move up quickly. And that's what we've seen on gold, even more so on silver. Here's the chart on silver. I mean, if you look at this is just a 6-month chart. 6 months ago, we were at 36. It hit up to 120. That's a 300% return there before we had the pullback. That's a mighty big drop. Looks like the 50-day is held though on silver though, Rachel.
Yeah, it looks like both of the metals are finding support at the 50-day. I think it's interesting too that obviously, like I think it's more of like a dollar story here too, Brent, with the precious metals as well, because we've obviously seen a little bit of rotation out of the dollar that's been range bound for quite some time. And we saw that break of support with the dollar as these metals were hitting those all-time highs. And then just recently, the last like trading week or so, we've had that rally back from support in the dollar, which looks like that's the catalyst that's putting some pressure on some of these precious metals because I know silver is more of that industrial metal, so it has some of those other uses, but it seems like, to your point, we're not just seeing the speculation in some of these areas where that trade has probably gotten a little overcrowded, but it looks like silver and gold, it's kind of told us more of a currency story as well, where folks have been putting that as a safe haven in those two names specifically versus the dollar here. So I think it'll be interesting to see if this strength in the dollar holds, because that may continue to just put additional pressure on those precious metals. And if not, we may see a rotation back into that space too.
Great. Awesome. Thank you. This is the dollar chart, everybody. You could also look at dollar futures if you want as well. There's a question in the chat. Let me just mention, someone's talking about a bad tick they're seeing on a chart. Let me just show you kind of how you can deal with if you're seeing a chart and you see some, like a candle that obviously just doesn't look right, usually you can just right click on that and click on correct this bar, and it'll bring up something like this. And if you know the exact prices, you can add it in. Otherwise, you can just click remove the bar and I'll just take it off the chart there on that. But so just addressing things in the chat there for you, everyone. Let's go and we've seen some of these big movers. Well, another big mover that we've seen has been in crypto. And let me just mention this: digital currencies such as Bitcoin are highly volatile and not backed by any central bank or government. Digital currencies may lack the regulations and consumer protections that legal tender currencies and regulated securities have. Due to a high level of risk, investors should view digital currencies as a pretty purely speculative investment. Let me go out a little bit longer term on this right now there. And because I want to kind of show you, let's go 3 years on Bitcoin here. So here's Bitcoin. A lot of you guys were riding this up, and we all heard from, some real crypto bulls for a while on this, but it's taken a pretty substantial drop lately from 127,000 right now to about 75,000. And if we're looking at this chart right now and the drop that we've had on this, where's the bottom, Rachel?
I think it's funny. I would definitely agree with you. Zooming out gives a little bit more context, like you've seen, and we can see that obviously we've lost support here on the daily chart, because old support, now new resistance, is right around that zone around like 85,000, 80,000 or so. And but in the long term, I think a lot of eyes are on that level of 75,000, and I think that's pretty crucial for Bitcoin. I know Bitcoin was highly correlated with tech stocks for a while, and I mean, now the correlation has broken, right?
Yes.
But there is obviously Bitcoin still acts as kind of like that risk signal in the market. So the fact that we've had like this distribution type formation in Bitcoin for quite some time, and now that it's at these kind of crucial long-term levels, I think that's giving an overall just kind of signal or barometer of like liquidity and risk appetite too. I think if traders see that we don't hold these long-term levels, that may give a further sign that risk appetite is kind of weaning in the market too if Bitcoin breaks down here.
Yeah, I thought I'd show everybody this. I'm just going to take some stuff off the chart, but I'm going to add in a correlation chart. And something you mentioned, Rachel, is the correlation between technology, and I'm just going to say the NASDAQ to use that as a proxy here. And you can add an indicator on your chart called correlation to try and see what the correlation has been over time. Let me go over here. And just as a reminder, on the scale, a 1 would mean perfect positive correlation. That is, if one item, in this case, the NASDAQ or Bitcoin, is going up, the other is going up by about the same amount, or they're going down by about the same amount. A -1, which we don't see on most things very often, but would be perfectly negatively correlated. If something's going up, we'd expect the other asset or whatever we're looking at to be going down. And a 0 would be just totally uncorrelated items there. But you can see is we've seen that correlation come down. We've seen it drop here. And let me just zoom in just a little bit here. We've seen this drop here more of late this year between the two, to the point where they've kind of been disconnected. Now, in the last few days, when both tech and Bitcoin have dropped, that correlation has gone up recently. But if you ever want to see the correlation between two things, the default is going to be the SPX. But I just changed that to the NASDAQ. If you want to change it between two things, you can just add in that correlation chart on there if you want to see the correlation between those and consider those. But right now, we'll see if that 75,000-ish level holds here on Bitcoin. Well, I guess we'll just have to wait and see on that. But that is that to me is interesting. And what we've seen here, let's look at the VIX here real quick. VIX has been kind of creeping up a little bit higher, probably not coincidentally that we've seen more volatility in tech of late, and we've seen that VIX creep higher up to about the 18 level there, Rachel.
Yeah, getting a little bit higher in the VIX, and I think obviously with the higher VIX, folks can expect a little bit more volatility from the index level. And I know, like, roughly the VIX that we're at right now, like 18.14, it equates to roughly a 1.14 daily move in the S&P 500. So that's what traders can just kind of expect to see from the index level with the S&P at this time.
Yeah. So here's what I want to turn to next. I want to talk about sectors. And to do so, I want to bring up a chart that you're familiar with, Rachel, because you created the chart here. Let me go to this sector relative strength, and I'm going to just maximize the cells here. And I was wondering, so here is energy. I have the labels on these. Rachel, could you explain what this chart is, this relative strength chart is?
Yeah, of course. So essentially what we're doing with a relative strength chart is we're taking a ratio. And so that symbol that Brent has there in the upper left-hand corner, that is the energy sector within the S&P 500. And we're essentially just comparing that to the S&P 500 as the benchmark comparison in the denominator. So this ratio analysis really allows us to see if a certain asset is outperforming or underperforming the benchmark. And so if the line is going up, which it is, in this case with energy, it shows that energy is one of those sectors that is outperforming the greater market, outperforming the S&P 500. If the line was going down, it would tell us the exact opposite. It would tell us that energy is more of a laggard in the overall market, like it was for most of this past year, where it just kind of lagged the major indices. Now, with the rotation that we've seen over the last couple months, energy has definitely stepped its way into the leaderboard on an absolute and relative basis. So this is kind of the strength that you're seeing here right now in the energy space.
Yeah, so this is the so what we're seeing is some sectors at any time you look in the market, some sectors are outperforming, some are underperforming. And we kind of hit on this earlier about how technology wasn't doing so great. Well, what has been doing it? Well, energy was one of those. Materials, kind of the same thing. The materials as a whole has been outperforming pretty significantly on this. Now, gold and silver, they had their little dip recently, which I think we can see there probably. But all in all, they've been a really strong part of the market. Now, if you're interested in looking at, well, what actually makes up materials, what you can do is you can always bring up this watch list. Go to public, go to S&P 500 sectors and industries. Okay, don't get confused between these two. This is the top, this is just pure sectors, and this breaks it down further. But you can then go and you can look, and as you look at this, what you'll see is you can sort them by the ticker symbol. And the first item in each of these is the sector. So energy is number 10. You may not remember that. I don't ever remember these, but here's 15, materials. And then what I can see is what makes up the materials. Oh, there's chemicals, there's commodity chemicals, there's fertilizers, there's industrial gases, and so on down the list there. So that is a way, if you're wondering what makes up the material sector or any other sector, to kind of see how it breaks down. Let's look at some other sectors here. Industrials have remained strong. Now, if you remember, when we were looking at that heat map, the Visualize tab, and we said, hey, the technology is huge and communications is really big, some of those smaller ones like energy and materials, they were kind of off on the right side of the page. They've been doing well, but you can see, even though they are doing well and have been doing well, the strength is just, it's not pushing the whole market very well. Here's discretionary. Now, sometimes we'll break down these sectors into defensive sectors and more like cyclical type sectors. Well, defensive sectors are those sectors that tend to do fairly well when the market as a whole is not doing well, or the economy was more concerned about the economy. And so some of those are doing really well. Consumer discretionary isn't a defensive sector, but staples is, and we could see the strength in staples here. Healthcare is. And so I don't know, you guys can use this chart if you want and go through this. Thank you, Barb, by the way, for adding that to the chat. And I'll add that to the description of this webcast as well for those of you watching on a recording, or if you need to go back for some reason and grab that. Financials has been lagging more. Now, if you want, you can always go back and you can just pull up your sectors over here. That's the sector industries. And here's your sectors. I just make sure you add the description. And I have a 1-day change and a 1-month change. If we look at the 1 month over these, we can see, just a different way of looking at it. Energy, consumer staples, materials have been the top performing sectors. IT, financial, and healthcare have been the lowest performing sectors here over the past month there. Any more thoughts or anything else you want to look at on sectors there, Rachel?
I think the one takeaway that I noticed here just from this chart by looking at absolute performance over the last couple months, and also looking at relative performance, we'd have a lot of rotation in the, I would say, like more defensive, or not necessarily more defensive. I guess more defensive would be looking at consumer staples. So I think it's interesting that that one is kind of making its way onto the leaderboard, but we definitely have a lot of rotation into more of the value oriented areas of the market, and definitely some of the real asset type of areas of the market too. And when you typically see energy, materials, industrials outperforming, it's kind of giving you warning signs of more of a possibly like late cycle type of performance. So I think that's an interesting thing here too. And then I saw a question just regarding just some of the uncertainty in Iran oil supply affecting the energy sector as well. And I think a lot of the times when you have uncertainties like that, you can expect kind of like that increased volatility, some higher risk premiums with that asset too, and just kind of like maybe even more elevated or unpredictable crude prices, which is kind of what we've seen over the last couple weeks, where we've moved above the 50 and the 20-day moving average, and we found support there. So if the strength in oil kind of continues, you may see continued strength in the energy sector, pushing that ultimately higher too.
Yeah, so here's the oil chart, and oil prices were quite low. 20-day, 50-day, we crossed. And just a reminder, again, these are futures. We're not talking about trading futures in this webcast. If you want to learn more about trading futures, we do have a webcast on trading futures on Tuesdays at 9:30 Eastern Time. We're just using this to discuss the price of oil. We had that 20 and 50-day crossover right there, kind of a bullish change. Well, there were some, tensions in Iran, with Iran have increased. Discussions of, is the oil through the Strait of Hormuz going to be affected? Seemed like, and that really kind of ramped up the price of oil. Well, things like seems to be getting a little bit better, but then we have yesterday, I think it was, the U.S. shot down a drone, an Iranian drone, and maybe a little picking up a little support here, I guess, so to speak, a little bounce. Where this goes from here, I don't know, but obviously this is something that's a very geopolitically sensitive asset here, and so that's I think what we're seeing reflected in the chart. Reflected in the chart here. So, and the Strait of Hormuz, I think 20% of the world's oil goes through that, and so it certainly can affect things, and that's where the concern is on
Yeah, it
this.
can also affect some of those like a marine shipper stocks as well. And I saw another comment in the chat about fear. I mean, we haven't seen anything to be fearful of in this case. It's just presenting different opportunities that you're seeing in the market. So I don't necessarily think traders are seeing a ton of reasons to be fearful or where those emotions really come up here. I think it's just you're seeing rotation happen in the market. You're seeing opportunities in different spaces than you've seen previously. And that's kind of, that's essentially what happens during a bull market. You have rotation, you have opportunities in one space, and those leaders become laggards and vice versa. So
that's a great point, and that's why we look at the sectors, because it's always different. What's performing well and what doesn't. It changes. In terms of fear, just in terms of the context of oil prices, this is where we are right now. You can see in the grand scheme of things, yes, it's come up, but this was a pretty low level, it seems, that we were at. And so I'm not sure this would describe as a super high level of fear. And we already looked at the VIX chart, but let me just bring that up again. Here's the VIX right now, not an extreme level. You start to get up, mid-20s, then we're starting to say, well, people are a little bit more scared in the market, or more concerned in the market. Now, something I do need to mention is it's earnings season, folks. We've passed most of it probably, but there are some big companies out there, and I want to look at some of those. Let me just go to the calendar real quick and just show you. This is just S&P this is just S&P 100 stocks. So these are just the largest stocks. Today is the 4th. Coming out tonight after market close, Alphabet. So that's going to be, that's one to look at. We've also had some come out this morning here. Eli Lilly, Uber, AbbVie came out this morning. And there's some on here that aren't on the S&P 100 that you may be of interest. But ARM Holdings is coming out tonight. MetLife, Qualcomm is coming out after market close today. And then tomorrow, the biggie is Amazon. So we're not through with earnings season. We've seen a lot. And so I thought maybe we just look at some of these real quick and discuss them. So this morning, we had AbbVie. we kind of had this nice little, look like a potential support here. And we had earnings, kind of gap down on earnings there. This seems like a fairly key level to me, though, Rachel.
Yeah, I'm seeing the same thing there, Brent. I think it's interesting that the high of today has found that level of support, and we're forming this almost like high wave type doji candle. And a high wave is a very long candle with a very small body, and we can see it's looking like a doji so far. Obviously, this is in the first few minutes of market opening, obviously, so we have a lot of room left today, but already it's forming almost like this indecision, pause, possible like reversal type candle forming at such a crucial level of support now resistance. So it'll be interesting to see what the rest of the session does today, and if we have any type of follow through tomorrow, if this really does end up being a type of like reversal candlestick today.
So that's a company had earnings there this morning. Lilly had earnings this morning, up about 7% today. I think in the scheme of the graph, it doesn't look that much to me, at least on the graph, but 7% is a pretty substantial jump. And if I were to look at this from more of a technical standpoint, I'd probably say, hey, we kind of had this kind of thing going here, but we were able to break above that. We weren't trending up. Is this a potential first step in a trend change here? What are your thoughts on that, Rachel?
That's what it looks like to me, and I think a lot of traders would agree, because I think the first thing that traders look for when they look for a change in trend, since obviously the downtrend is lower highs, lower lows, the first kind of signal of that change is to make a higher low or a higher high in that case. And we've made that higher high from that candle back in at the end of January there, where we connected the trend line. So I think that's kind of like the first step for this possible turn of this downtrend. Obviously, we're going to need to see additional follow through. I think traders will want to see Eli Lilly definitely hold that 20-day and that 50-day moving average, especially since it sloped out pretty flat now. It looks like then that's going to be that next level of near-term support is the 20 and the 50, and then obviously those highs as resistance there.
Okay, another company you all are familiar with that had earnings this morning, Uber, not so good. Lilly was up 7%, Uber's down 7%. This, unlike Lilly, is in the same direction though as the prior trend, so that's not a great sign.
No, Uber looking like it's breaking these short-term levels of support right there. I'd be curious to see what the chart looks like on a 1-year daily too, because it may give us a few other levels that traders may be looking at as far as like where it could possibly catch support. And it looks like likely that next area of support, yeah, maybe right around 70 or so. But underneath that, you have yearly lows right around 60 or so there with that next ledge.
Yeah, so this hopefully for Uber investors, this is we don't see this, but it seems like that's a potential support level. Right now, today's candle isn't looking great on it because we're kind of near the low of the day, and that's not a great thing here. And there's one other that I just wanted to point out that had earnings this morning. Here's NVO, again dropping, probably support down here it seems. Haven't broken down below that. We'll see how the day goes on this. This is down about 5.5% today on NVO. So we'll see where NVO goes. Now, we do have some companies that have earnings coming up after the bell today. So we'll go and, I always have to preface this. Here's Alphabet, obviously, big company, important earnings. This could certainly affect the overall market. Strong trend. We've been holding that 20-day, 50-day. One thing I always tell people though is when we have earnings come out, whatever technical analysis we do before earnings, if it's going to change, earnings is often the time when you'll see the technical analysis change. In other words, if we have a trend, often the trend will change, will start to change with an earnings event or a broken support or resistance. But right now, this chart's, in my mind, looking pretty strong here, Rachel.
Yeah, there's really no technical break in the trend. It's holding that 20-day moving average pretty nicely. I think a notable thing here too, obviously we've seen this recent strength in the communication services sector, and I know Google takes up a pretty large percentage of it, almost 12%. So I think it'll be pretty telling, especially with its results and how the stock price reacts, to see how the overall sector kind of moves after that. But I think couple levels to pay attention to would probably be around like 325 as that level of horizontal support that I think a few traders may be watching, because we saw those recent highs getting crafted out in November there, and then we saw that bullish engulfing, it looks like a bullish engulfing, maybe not, happen here in at that level right around mid-January or so. So I think that's going to be one of those crucial levels to hold, since we are so we are pretty closely trading around that 20-day moving average too.
Yeah, that was a nice strong bounce that we had there, because we were traced back to that 20-day moving average. And when you get that, that's a kind of a strong confirmation. That would be a pretty significant break if we were to break below that. And it's got a little ways to go down there. That's where the 50-day, of course, as the more data points we get up in this range, the higher that 50-day is going to move up. But if we were to get a drop, then that would be probably a significant level there on that. There's actually, let me just see. Well, we have, what else is coming out today? Now, Qualcomm is probably the other kind of biggest kind of techie type company that has earnings coming up after the close today. It seems like critical level on Qualcomm. I'm going to call that a support level here for us. And we'll have to see how that goes. Heading into earnings, not looking great. Of course, earnings can change things. We'll have to see. That's after the bell there on Qualcomm. There's a couple other companies actually I wanted to mention. Someone's mentioned in the chat a couple times. I know I've seen it. We've had earnings on Palantir. Looks like a slow rollover in trend there, Rachel, on this. Not helped by, well, earnings. Earnings was an interesting thing on this, because the actual earnings, our initial reaction was positive here, but now today down almost 10% today on this, and that's a challenge. Go ahead, Rachel.
Yeah, I find that one interesting. I mean, I have been watching over the past few months it just forming this very large head and shoulders pattern, starting the left shoulder really in July, and then forming that really zone or that neckline right around like 142, 143 or so that it's touched a few times. And so I think I think a lot of traders were watching that type of pattern, just because a lot of the times, if a pattern like this doesn't break down, it typically means that, okay, this is just an ongoing, possibly accumulation pattern before that continued move higher with the ongoing trend. And it looked like it was going to be that way yesterday. And then today it just looks like it's breaking down through support. So I think a lot of traders may be watching maybe a measured move to the downside with this one, at least finding that next level of support, probably around like 130 or so, where we saw those beginning of July lows there.
Awesome.
As probably next level.
Okay, well, we're getting low on time. Let me just hit up two quick stocks here. Disney had earnings, dropped through potential support on earnings. This one this support has held, so we'll see where we go. Nice little recovery today, up about 2.5%. We'll see where that one ends up. And finally, PayPal had earnings. Not so great there is an understatement on earnings on PayPal. I don't see anything bullish on this right now. But who knows what the future, these, sometimes things that were bearish, that can change. So that's not a prediction of the future. All right, Rachel, we are out of time. Thank you for joining me today. Let's see, Rachel, you have a long options webcast. Remind me when that class is.
That is on Tuesdays at 1 p.m. Eastern Time, and the price patterns one is the one at Wednesday at 1 p.m. Eastern Time.
Okay, so that's today, price patterns. So make sure you check that out with Rachel. Everybody, thank you for joining me today, and Rachel today as well. We appreciate you watching. Thanks to Barb in the chat for helping us out here in the chat. Appreciate Barb. And remember, you can follow the three of us on X at Barb Armstrong CS, at Rachel-CS, at Brent Moore CS. Thanks, everybody. Have a wonderful rest of the day. Bye-bye.